So you're probably looking for a startup business loan, bad credit, no revenue. So you have a startup. I mean, things are really complicated already. I mean, you have to run your business. You need to find customers, and now you need to get the cash to get the business running. So here is the overview I really want you to really think about. So the big question is, do you need a business credit score for a small business loan? Like if you have a startup, do you need a business credit score? But based on our research, and we have been doing this for the last 25 to 30 years, you really don't need a business credit score. Especially if you're a startup, you're just new, right? You're a new kid on the block. So business lenders, they'll give you a break. And the thing is, they want to focus maybe on your personal credit score. Okay. And the thing is, even if you have bad credit score, you can still qualify. But the thing is, it's all about the strategy that you have. It's all about the plan you have. It's all about the formula you have. You need to have a vision. And vision means what? Vision means that you need to know which lender will be more suitable for you. Don't you try to actually cast a wider net when it comes to business lending or business borrowing. Don't you try to cast don't apply for many business loans. That's my point. The point is you need to ask yourself, okay, right now, based on my industry, based on my credit score, based on my financial situation, based on my banking relationship, which lender will be more amenable to me? Which lender will be more suitable to me? This is a quintessential question you got to ask yourself. Okay, so you don't need a business credit score necessarily. If you have one, that's fine. Because when we talk about startups, some startups can be in business for 1 year. Okay, 1 year is a cutoff when it comes to labeling a business a startup. So if you have it in business for 9 months, you can be a startup and have a business credit score. But if you don't have one, that's fine. Just focus on your personal credit score. Make sure that you push your personal credit score up, and make sure that you reach out to the right lender. Okay, a lender who will actually look at the totality of the stuff you bring into the table, not just your credit score. Because if you're a startup, you don't have you have a lot of stuff that go against you because you have no experience, you have no proven track record. So you want to think about the things that will actually beef up your application. So credit score is number one. Your personal finances is number two. Your personal tax records are number three. Your personal experience number four. So you have a constellation of things that can push your application up. So here are the steps I want you to follow. Okay, so if you want to get a startup business loan and you have bad credit and you have no revenue, here are the steps. But by the way, before I give you the steps, please welcome back to the show. It's really a pleasure to have you here. I love having another 15 minutes to 20 minutes with you to explain things that deal with personal credit, business credit, and whatnot. So in today's conversation, we're talking about business credit, startup business credit to be more specific. So if you want to be approved for a startup business loan, bad credit, no revenue, you need to actually first check your credit score. Very important. You have bad credit. How bad is your credit? Do you have poor credit or do you have bad credit? Those are not the same thing. Okay, if you have a 350 credit score versus you have a 500, we're talking different proportions here. It's really important to have a clear idea about where you really stand on the FICO spectrum. Okay, so first check your credit score. Do me a favor, go to annualcreditreport.com. I want you to pull up your FICO report, your credit report. Know exactly what you stand. Not only with the one credit bureau, but all the three. I want you to know exactly where you stand on Equifax, TransUnion, and Experian. Number one. Then you want to research your options. I just said that before. So if you look based on your credit score, you need to ask yourself whether you could qualify for a loan at a bank, at a regular bank. And when we talk about banks, you also have like sizes, you have layers. Are you looking for a national bank? Are you looking for a regional bank? Are you looking for a community bank? Are you looking for a state bank? Like, for example, you can say, you know what, I'm going to apply for a large bank. Like, then you want to target the Chase, the Wells Fargo, the Citibank, the Bank of America of the world. Or I'm going for a tier 2 bank, what we call tier 2. So here you're talking about PNC. You're speaking about US Bank. You're speaking about Fifth Third. You're speaking about BMO Harris. You're speaking about other players that you have. You're speaking about PNC. So that's the kind of stuff I want you to think about. Okay, then now you need to write a business plan. You got to write a business plan. I mean, don't you try to be a lazy ass here. I mean, we see a lot of startup founders who are like, yeah, I don't have time to write a business plan. Or they do not understand the importance of writing a business plan. You gotta write a business plan. I don't care. Don't you start giving me excuses, okay? Don't you start giving me excuses. If you need help writing a business plan, drop us comments below. We'll certainly help you out. We'll either point you to the right resources, or share with you some templates you can use to write a business plan. And also think about collateral. Maybe you might have to provide collateral. Who knows? Okay, or maybe trying to find a co-signer too. If you have bad credit, if you have a poor credit, maybe a co-signer can help you. Let me give you a few pro tips so you are clear about the conversation I'm having today. By the way, I want to quickly remind you of today's topic. We're having a conversation about how to get a startup business loan with bad credit, no revenue, a really high amount. It's important for you to understand that if you don't get a startup business loan, you have alternatives. Don't you actually go pessimistic on me here. No, don't do that. Okay, you're looking for a startup business loan, and my question to you is, do you even know the typology, the loan typology we're talking about? Do you know that you have gazillions of startup business loans when it comes to the types? You don't only have one type. I mean, you're looking for money, right? You're looking for a startup business funding. Okay, just know there are different types of funding. I mean, do you know that even credit cards, business credit cards, constitute a type of startup business funding? Oh yeah. So I just want you to really be clear about the fact that you're not just looking at one type. Okay, if you don't get a startup business loan, maybe go for a credit card. Okay, think about, besides credit card, you have short-term loans. So short-term loans, those are your regular loans. So usually they will want you to repay the loan within 12 months or 24 months. The thing is that a lot of lenders are kind of scared, because when we talk about startups, they're thinking, well, what if something happens? They want to cover their ass. So because of that, they will actually limit the window they're giving you when it comes to a startup loan. So instead of giving you 5 years, they'll probably give you 2 years. They'll give you 1 year, because they are really scared as hell. They are scared as hell. So they're giving you 1 year, and they say, listen, we'll charge you 18%, we'll charge you 20%, and you have to pay us back within 1 year. So the conditions are kind of excruciating, but hey, listen, it is what it is. You got to take care of business. You got to do what you got to do. It is what it is. And also think about, you might have short-term business lines of credits. This is another thing you need to think about. Okay, you also might think about invoice factoring. So invoice factoring is another type of startup business loan that you need to think about. You also have to think about invoice financing. Okay, invoice financing is another type. Now, there is a slight difference between invoice financing and invoice factoring for a startup. So invoice factoring means what? As a small business, as a startup, if you have an unpaid receivable, you can turn that unpaid receivable into cash using factoring. So factoring companies buy your unpaid invoices from you for a percentage of their value, typically about 80 to 85%. So the factor collects payments on the invoices from your customers and pays you the balance on the invoice minus the factoring fees. So the value of your invoices, not your credit score, is the primary consideration for factors. Now, what about invoice financing? So although similar to invoice financing, to invoice factoring, the short-term financing method has some key differences. So instead of buying your invoices, the financing company advances you the value of the invoices. So you are responsible for collecting payments from your customers and paying back the loan and any related fees. Also think about equipment financing. So if you are a startup and you are looking for a startup business loan with bad credit and no revenue, maybe equipment financing could be the option that you might need, right? So especially if you need equipment for your startup business, because this type of loan is used to finance the purchase of equipment using the equipment itself as collateral. So if you want to buy a cargo van, or you want to buy a sprinter van, for example, you can actually think about, and you have bad credit and you have no revenue. Let's say you're a startup owner operator, You might think about this form. Also you can think about a merchant cash advance. So if you are a startup and you accept credit cards and debit cards transactions, you can actually use this form to qualify for business financing. And again, we're talking here about a business financing type that does not that does not take into account your credit score. So you can see, as I was just saying earlier, it's important to know the different types of startup business loans, bad credit, no revenue available out there, so you can make the right choices for your business now and in the future. Let me give you a bonus tip here, and it's really important. By the way, I want to quickly remind you of today's topic. I'm talking to you about how to get a startup business loan with bad credit, no revenue, and a high amount. Okay. Now, the thing we need to be clear about that there are some factors that impact your approval odds. Whether you're a startup or an established business, you need to understand that there are some elements. See, the whole thing is the business funding process, the business lending process is not a static thing. It is a dynamic process that constantly changes. Okay, and lenders are trying to adapt to changing conditions, and you as a borrower, you also need to adapt to changing conditions. And it's important to understand that in this whole dynamic, in this whole sea of dynamic changes, you have factors that impact your approval odds. You have factors you need to compare when choosing a loan, because you got to make a decision. Okay, there are moving elements in this equation. So what are the factors that impact your approval odds? The type of lender will actually impact your approval odds. Generally, if you're a startup, you are more likely to find approval at online lenders and alternative lenders. Even though their APRs might be a little higher, they are more likely to approve you. But if you go to a regular bank or a regular credit union, your chances are slim, unless you have a strong relationship with the institution. Because usually banks and credit unions, they just want to cover their ass. They want to cover their asses. So they are just like less likely to approve your application for a startup business loan, especially with bad credit and no revenue. I mean, you have so many bad things, quote unquote, bad things that we can see in this equation, right? Bad credit, no revenue, startup. Those are not keywords that appeal to banks. Okay, so your personal credit score will also impact the approval odds. The age of your business will impact the approval odds. And there are some factors you need to compare when choosing a loan. Okay, now when we talk about factors to compare, think about the loan term. Think about the interest rate and APR. Think about the loan limits. Think about the loan fees. So those are things I want you to think about when considering a loan. You need to compare those items. You also need to think about factors that lenders consider when they evaluate startup business loans with bad credit, no revenue. And the very first factor is that your annual revenue. So if you have no revenue, obviously you don't have, if you have no revenue, you have no revenue. But what you need to have, and this is really important, you need to have financial projections. You got to have financial projections so that you can contextualize your business for the lender. See, the whole thing is that if you don't contextualize your business to the lender, you're not actually boosting your chances of approval. Okay, you got to give the lender something to chew, some meat. Give the lender something. Don't just apply and say, well, I ain't got no revenue. Okay, you ain't got no revenue, so what? You want to have realistic financial projections. Lender will also pay attention to your cash flow. Again, you have no cash flows because you are a startup. So you want to have cash flow projections, aka a projected statement of cash flow or estimated statement of cash flow. You need to tell the lender, hey, listen, this is what I expect to actually to derive. This is the kind of cash flows I expect to derive once I'm all set. Think about your current debt load, because the lender is going to look at your current debt load. I mean, you're a startup. Do you have existing debt load? And by extension, the lender is going to pay attention to your personal debt load. Are you, quote unquote, loaded when it comes to debt? or are you light? They'll pay attention to that. They'll look at your business plan, your startup business plan. Okay, this is why I was just talking to you earlier. The lenders wants to really see if there is logic in your business model, if there is logic in your business vision, there is logic in your business strategy. Are you in this for the long haul, or are you just like, I'm just testing the waters? If things work, they work. If it doesn't work, it doesn't work. No, 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 no. No way, Jose. No. You have to have a strategy. You got to have a formula. You got to have a plan. This is important. And part of that plan is to actually have a loan purpose. You need to explain to the lender that you have a loan purpose, because traditional lenders and alternative lenders, for that matter, they want to know exactly what you will use the loan proceeds for, and the financial impact the loan will have on your business, such as increasing sales, boosting production, acquiring new clients, and whatnot. So if you're a startup, this is really important, because the lender wants to make sure that you are using the funds appropriately to boost your startup. Okay, so this is how you increase your chances of approval. Let me give you the approach you need to have if you want to if you want to really engage in the whole startup business loan, bad credit, no revenue thing. And the thing is that, bad credit is not something static. You need to understand your credit did not start at bad, right? Something happens, life happens, stuff happens, whatever. I mean, been there, done that. So the thing here is that life circumstances have placed you in the position you're in right now. So it means what? It means you can improve your personal credit score. It means you can take steps today to improve your personal credit scores. It means that you can actually take the steps today to actually change things around. Don't believe that this is static. Okay, think about paying your bills on time, all the time. And we're not just talking about credit cards. We're talking about loan payments. We're talking about your rent, your utilities, your phone bills. Talk to me about that. Think about your credit utilization ratio. Reduce it to less than 25%. People talk about 30%, 33%, 35%. We are talking about 25%. We're more conservative here. Okay, think about applying less often for credit. Okay, and while you are working on your personal credit score, work also on your business credit score, because if you are a startup, you have no business credit score, but over time you're going to have to build a business credit score. You're going to have to register with Dun & Bradstreet. By the way, register with Dun & Bradstreet right now, so at least you can get your DUNS number. And because without a DUNS number, you can't really have a business credit score. So you want to start by having a DUNS number, so you have a clear idea. So at least you are in DNB database, right? Think about also registering with Experian Business and also Equifax. This is really important. Again, the whole thing is for you to have a foot in the door, a foot in the proverbial door. Okay, and also think about reassessing your business plan. You see, the thing is similar to your credit scores. Your business plan is not a static document. It changes, it evolves, it adapts to changing conditions, it adapts to evolving conditions, it actually adapts to dynamic market conditions. So make sure that your business plan is in sync with what's happening in your business, with what's happening in your industry. So you're constantly, and also your cost structure. Okay, so overall, this is it. If you're thinking about a startup business loan, bad credit, no revenue, here you have it. Thank you so much. I just talked to you about I gave you an overview, give you the steps, the pro tips, the bonus, and the approach you need to follow if you're trying to really get a business loan with better terms. Start a business loan, bad credit, no revenue, with better terms. Thank you. God bless you. I will see you next time. But until then, remember, stay marvelous.